on this edition of Next Africa. We bring you Bloomberg's 2026 African Startups to Watch list. From Nigeria to South Africa, these companies are racing to solve some of the continent's toughest challenges. As funding conditions tightened, investment into African startups held up in 2025. We speak with venture capital investors on opportunities and challenges of investing on the continent. And we hear from Moniepoint co-founder and CTO Felix Ike on building one of Africa's leading fintech platforms. Welcome to Next Africa. I'm Jennifer Zabasaja. For a second year, Bloomberg is taking a deep dive into Africa's startup culture. And our 2026 list of African startups to watch spotlights a new wave of companies tackling some of the continent's most urgent challenges. This year's theme is urgency, with a focus on companies building solutions where infrastructure gaps and strained systems have left millions underserved. For a closer look at the innovators that made the cut this year, we're now joined by Bloomberg Managing Editor for Africa, that is Arjit Ghosh. Arjit, thank you so much for being here. As I was mentioning there, this is the second year that Bloomberg is doing the Startups to Watch list. Let's just start with the theme, urgency. Give us some context as to how that came about and why you felt like this was the year for this theme.
And thank you, Jennifer, and that's a great question. So the urgency, as you rightly mentioned, there are so many other challenges on this continent that that companies are trying to solve, especially the startups. And that's what we thought. We will kind of focus on urgency this year. But, if you look at other countries like the US, for instance, the big focus is AI, right? But here in Africa, companies are really trying to solve everyday challenges and even trying to scale using, coming into those solving those challenges, really. Now, for instance, if you look at Madagascar, we found a company there that has been looking at ways to find ways to tackle climate change and food production. In Tanzania, there's another company that is looking at safe ways to get drinking water to millions of people, and they can really scale, I think. So that's what we thought will be kind of we will look at urgency, and we'll call it urgency for this year's list.
And as you point out, it's startups are focusing on different solutions depending on where you look in the world. But I think what everyone has maybe as an overhang for most of the world are the changes to the investment environment, given the Trump administration, given what we're seeing in the Middle East. Have you seen that factor into any of the startups that are on this list? Sort of the funding challenges and maybe the opportunities that they've had?
So we spoke to a couple of founders, and one particular founder in Chad. So he told us that earlier it was Africa growth story that investors were focusing on, but now it's changed to where is the operational discipline, what's the unit economics looking like. So that seems to have changed. What we saw last year was that a lot of the startups were depending on African backers. And that seems to have increased this year from the list that we collated. The other thing that we kind of noticed was debt financing. Right? We saw that a lot of companies were actually going in for debt financing rather than equity. And could be because, companies, given all the risk that is around this world, they really want to make sure that they get their money back, and that's why they were looking at debt, for instance.
And a noticeable change from last year.
Correct. Yes.
Yeah, you mentioned some of the startups that are on this list. We of course know that there's quite a few, but what others have stood out to you that people should be paying attention to? We do have the full list, though, out right now, but what should we maybe talk about at this point?
So, for example, this company from Chad, it is doing telemedicine, and they've set up kiosks, not just apps. They've actually set up kiosks, solar-powered kiosks that actually people can go in. And this is the first time a company from Chad has come in. The other exciting bit was that we actually saw companies all the way from Ivory Coast to Madagascar. We even have a company from Somalia, which is kind of using weed to come up with biochar and charcoal. So it was very exciting to see that there are companies from across the continent, and not just the 3-4 major hubs, really, Egypt, South Africa, Kenya, Nigeria. They do have excellent ecosystems, but we really saw this really spreading out to other parts of the continent. So that is exciting.
And perhaps that's a good sign for the rest of the startup ecosystem.
Absolutely. Yeah, I'm hoping that investors will look at them and kind of go there.
Yeah, well, it's very exciting, of course, as we were just mentioning. Arjit, thank you so much for your time and for joining us this month. And of course, as we mentioned, for the full list of startups that made the cut, simply scan the QR code on your screen to discover the companies selected this year. African fintech unicorn Moniepoint was founded in 2015 and has grown into one of the continent's standout success stories, from powering payments for small businesses to building critical financial infrastructure. The company has scaled rapidly and earned its place among Africa's most valuable tech firms. I spoke to Felix Ike, the company's co-founder and CTO, about their journey from startup to unicorn and what it takes to build at scale in Africa's fast-evolving tech landscape.
Right now, Moniepoint processes about $22 billion worth of transactions monthly across 1 billion transactions. And we process over 80% of the POS transactions in the country. And we've also disbursed, I think, around 1 trillion naira worth of loans to small businesses. And all of this is positioning ourselves to make sure that our businesses succeed, our customers succeed, because the primary objective of Moniepoint is to help our businesses succeed. So far, that's the journey.
I wanted to touch on the unicorn status that I was mentioning, because we talk about it. There's obviously quite a lot more unicorns in different parts of the world, but in Africa, you really are part of a group of just a few, and it's very much concentrated in fintechs and digital financial services. How much weight do you put behind unicorn status for yourself, and do you think we'll continue to maybe see more unicorns on the continent, specifically just in this sector?
Our validation is good, is nice. It's a way to validate the work you've done, but we're not primarily driven by that valuation, right? The core goal in Moniepoint is to provide value, both for our customers and for our investors. And that has been what has been driving us. In our last raise, the quantum was about $200 million. And I think this was what actually got us across the unicorn status. But before then, we've been doing significant amount of work to service our customers. So to answer the question on whether we should expect more unicorns, I think I'm hopeful that yes, there will be more unicorns coming out of Nigeria and other parts of Africa. The reason is I know a lot of startups are busy trying to create value in Africa. And the truth about value is once you have value, you have a better chance of, getting paid for it. So I see a future where potentially you would see more startups get into that status eventually because they've created value over time.
Does that mean that you're profitable?
Yes, we're profitable. The truth is we've always been profitable even before we went into building a banking solution. When we're still servicing the banks, we're profitable. The moment we moved into banking, and we've remained profitable. In our last raise, right, we're profitable before the raise and we're still profitable. So ultimately, like I mentioned earlier, we want to provide value for both the investors and our customers.
Ultimately, there is the end of the line, or maybe the beginning for some companies, and that's the IPO. Is that something that Moniepoint is thinking about?
So exit is something we have. I think right now we're still discussing it, to be fair. IPO is one route. There are other routes, but there are a few things to consider. The size of the company will somewhat affect which route you eventually go for, right? If you become really, really big, the chances of acquisition might be slimmer. It doesn't mean it will be impossible, but the chances of acquisition will be slimmer. But there's a certain size you'll be in, it becomes a viable option for you. For Moniepoint right now, I think all of these options are still on the table, some more than the other. But I'd say within the next couple of years will become very, very clear which direction will be more suitable for us. But these options are all on the table.
Up next, the venture capital trends reshaping Africa. We speak to Alithia Capital's Takumba Ishmael for a view from investors on the ground, and Kaleo Ventures' Andrew Furman on how international investors are looking at the continent. But first, GEM is a Cape Town-based startup that's building an HR platform for the deskless workers. CEO and co-founder Simon Ellis shared more about his vision behind the startup.
We've built things on top of WhatsApp that enable an employer to connect and communicate with their workforce using WhatsApp, a tool that everyone has. Instead of an employee having to download an app or log into a new email to get something small like a payslip, you can now just get it on WhatsApp. The same applies for leave, for timesheets, for pretty much anything that you would need to do, an increase letter. And so we've applied the customer experience, that is this beautiful WhatsApp native experience that we all use, and applied it to running the day-to-day lives of a business. So I think this WhatsApp thing has been a total game changer for us, but you can understand why an employee who previously had to wait in a line to get a printed payslip now loves being able to access their payslip through a familiar channel like WhatsApp in a couple of seconds.
Welcome back to Next Africa. I'm Jennifer Zabasaja. Investment into African startups held up in 2025, even as funding conditions tightened. According to Africa, more than $5 billion was invested in African startups last year, with deal activity also rising. In the tech sector, the picture was likewise resilient. Data from Partech Africa shows startup funding rose 25% to just over $4 billion. And while global venture capital is chasing AI, Africa's market focused on businesses solving real-world problems, with investors continuing to back sectors like fintech, clean tech, and health tech. I caught up with Takumba Ishmael, co-founder and managing director for Alithia Capital, for the view from investors on the ground.
People have been looking at more fundamentally driven businesses. The age of just grow it and blitz it with, throw money at it to grow it and they'll come has gone. It's how can you build more resilient growth, growth that is more sustainable and endures. And we have been looking at that before the Gulf conflict, the recent Ukraine war and the war in the Middle East, and been looking at impact that's fundamentally driven, that also drives the income, which is why the having the diversification from the foreign currency volatility is also important, because it's not just how do you stabilize based on geopolitical events, but how do you stabilize for your local currency? So you're looking for resilience all around. What you've also seen, if we're looking at numbers, is that at its height, about 3 years ago, I think the VC market was around $5 billion in that year in terms of $5 billion investments. But what you've seen is a bit of a dip in the last couple of years where that's gone down to just under 3 million, where you're now seeing, yes, from that $3 billion level, it's growing, but it's growing more meaningfully and with more resilience and more fundamentally driven.
And we've also noticed in our next edition of Africa's 25 Startups to Watch, it's quite interesting that actually 26% of funding came from the U.S., while African investors, which speaks to your point, accounted for 45%, which maybe sort of speaks to what you're saying. Maybe we are seeing a bit of a tipping or shifting of the scales.
Well, there are a couple of things at play. I expect that, yes, we will see an increase in the domestic base. I also expect that we're going to see the foreign investors begin to come back as they see the quality of what's being invested in and growing. On the domestic side, what you've seen in the past is that that domestic funding has gone into armchair investing, maybe treasuries, what they call the safe haven. And they're seeing that the returns on those are not matching the returns that you can get in some of these private capital investments. But also their duration asset liability matching is a little bit out of sync. So you're seeing the balancing in the pension funds where they're thinking, okay, I need to have duration for the long term. I can take a little bit more equity risk. And so let me look at these new asset classes. What you're also seeing is that with their funds, the pension funds are ballooning, right? So we're seeing billions of dollars in the African pension landscape. And the armchair products that they had in the past can no longer meet the demands for pensions investments. So you're seeing that there's also a forcing element that we need to think about new products. We can't just rely on this traditional base because our funds under management are outstripping that.
I also caught up with Andrew Furman, managing partner and co-founder of Kaleo Ventures, for a view of how international investors are looking at Africa.
If you're viewing everything on sort of equal footing, anything we do in Africa is going to be more risky than the US. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road. So we would just encourage more of a nuanced view of what risk actually is. And a lot of it comes down to the holistic view, including valuation.
What's been interesting with our newest Africa's 25 startups to watch list is that we've noticed sort of the scales tipping in terms of who the investors are. And we actually found that 26% of the funding has actually been coming from the U.S., while African investors are actually climbing and now account for 45%. Just considering what you're saying and considering you're sitting in the U.S., are you seeing maybe sentiment shifting a little bit?
I think there are some structural reasons for that, again, are neither good nor bad. But in the US, you obviously have a lot of homegrown AI that maybe isn't happening to the same extent in Africa. I think that's okay. So I think naturally, I would expect the numbers to show increases in African investors more than US investors, because US investors are just capturing a domestic opportunity that in a lot of ways could be a multi-trillion-dollar opportunity. I don't think that's bad for the African ecosystem. A lot of times, when you hear me talk a lot about these really African contextualized problems, it's going to make sense to me that a lot of domestic on-continent investors in Africa are going to understand those problems a little bit faster. They're going to be more willing to back them a little bit earlier. I would still say I do expect a lot of the more blue chip US VCs to still have a high willingness to get involved in Africa once you show that those companies are actually generating solid traction, they're good unit economics, they're creating a product that actually can scale quite well. So what I'd say is in the short term, I'm a little bit less concerned about where those numbers go. I think eventually what we'll see is local African investors, in my view, should be a much higher percentage of that early backing. And then Western investors are going to be a higher percentage of kind of that later stage backing where you're expecting the larger Series B and Series C type VC checks.
Coming up, we'll take a deep dive into one of Bloomberg's Africa startups to watch and see how one defense startup is turning a growing security challenge into a scaling business. But first, Deftronics is a solar-powered hearing aid company based in Botswana, and it also made our list. CEO Tendakai Katsiga shared more about the inspiration behind this startup.
At Deftronics, we manufacture affordable solar-powered hearing aids that are made by people who are hearing impaired for people with a hearing loss. So the whole idea is for us to provide hearing aids so that people have a better life. People can be productive. According to the World Health Organization, there are 340 million people with a hearing impairment, and only 10% of them can afford to have hearing aids. So you see, there's a huge market, and And the opportunities are so huge, and we can also scale globally.
Welcome back to Next Africa. I'm Jennifer Zabasaja. One company on Bloomberg's 2026 Africa Startups to Watch list is drawing global attention for its ambitions in drone technology. Terra Industries is now scaling up production as demand grows across West Africa. Drones are rapidly reshaping modern warfare, and one African startup is betting it can build them at scale. Terra Industries is a Nigerian startup founded by CEO Nathan Nwachukwu with co-founder Maxwell Maduka. Backed by $34 million in seed funding from investors including Palantir's Joe Lonsdale and Lux Capital, the company is developing both drones and the systems designed to counter them.
The kind of war that Africa is fighting, and to be honest, the kind of war that most of the emerging markets are fighting, is an asymmetric warfare against terrorism. The doctrines are different. The kind of systems needed are different. You would need a lot more attributable, low-cost, and intelligence-centric systems. You also need systems that can survive the very harsh terrain, especially of Africa, which a lot of the systems from the West are not built for.
Now, the company is expanding beyond Nigeria, opening its first international factory in Accra, Ghana's capital city. The facility will serve as its main regional manufacturing hub, with plans to scale production from several hundred units today to as many as 50,000 drones and counter-drone systems within 2 years. Nowhere has the effectiveness of battlefield drones been more apparent than the war in Ukraine, but they also have become a critical part of conflicts across West Africa. Analysts say this marks a shift from traditional tactics to more advanced forms of warfare, and part of that shift is being driven by access to cheap, widely available technology.
They have access to low-cost, off-the-shelf components that also provide them with tactical advantages, not only to carry out strikes against the critical infrastructure or military positions, but also to use them in their propaganda and media operations.
According to ACLED, a conflict monitoring group that tracks violence across Africa, the continent now accounts for the majority of Islamic State-linked activity, with more than 2/3 recorded there in the first half of 2025. Encountering these attacks is becoming more complex.
You need jammers, radars, and more advanced equipment, and it is somewhat costly in comparison to the low cost that these components or technologies are being used in the hands of non-state-owned groups.
That's where companies like Terra Industries sees an opportunity. The company says it has already tested some of these systems with governments across West Africa.
We are building out a regional network of factories across the continent. We are also starting to work with other emerging markets, like in Latin America and Saudi and the Middle East, because essentially this sort of threats that we are facing here has become very transferable across the emerging markets.
For Terra Industries, the next challenge is scaling. The company says it plans to raise a larger funding round in the coming months as it expands manufacturing across Africa and other emerging markets. And that's Next Africa for this month. But don't forget our weekly podcast for more of what's happening across the continent. That's available on Apple, Spotify, and wherever you usually get your podcasts. You can also, of course, subscribe to our daily Next Africa newsletter, available on the terminal and website for even more reporting from the Bloomberg team. I'm Jennifer Zabasaja in Johannesburg. We'll see you next time.